Let's see. We've had quite a natural gas market. Let's see what we got out here. We got natural gas numbers coming out at 10:30.
We sure do. So it's about 10:20 right now. We get those numbers at 10:30, the EIA inventory. And yeah, even since this morning, right, trading from about 349 up to 356. We're sitting at about 355 right now. So we get the inventory numbers at 10:30 in about 10 minutes. I jumped in here to the commodity spreads, natural gas, and I pulled up the 11 a.m., the 9 to 11, the 11 a.m. expirations. And what's nice here is that you got natural gas, we're looking at December, trading, you know, within a couple ticks of 355.
Yes.
And you have contracts lining up to the bullish and bearish side. So, you know, we're looking at a potential volatility trade.
At 355.
Yeah,
okay,
right.
Cool. Right.
So the bullish spread being barely about 2 ticks out of the money, right? 354.8 we're trading at right now. So that bullish side costing you $9 or 9 ticks as it's ticking in the, I guess that would be the thousandth, 10th, 100th, thousandth. Yeah. And on the bearish side, 355 down to 335. Same thing, except you're about 2 ticks away. So this one costing you 10. Let me get back here. Now the bearish one has a little bit of intrinsic value.
Well, the spread's different too, right? Oh no, I see it. 5.4. Okay, it's there.
Yep. I mean, we're sitting so close to 355.
Okay, right.
It's literally 354.9.
Yes.
Which is 1 tick.
Right.
Which represents $1 of intrinsic value that you'd have on the bearish side right now. And that's why, you know, the bearish one you're selling and you're buying, you can see the bearish one a little bit more expensive, representing that value. So you're looking at about $20, represents about 2 pennies.
It's not bad.
To keep things in check, right? Because it's trading in 1/10 of a penny ticks.
Right.
So you need about 2 pennies. And you'd have exposure till 11 o'clock. You get the inventory numbers at 10:30. Now, what's nice is, at least the noons I jumped, they line up the same way. So if you want an extra hour of exposure, there's your bullish spread. You're buying that. Here's your bearish spread. Same exact price.
Same numbers, too.
Price parameters, cool. Right? So you're only paying for that hour, and you're looking at about 26. So do you want to pay those 6 ticks or 6/10 of a penny? That represents about 2.6 pennies you would need of price movement away from 355.
I'd like that, yeah.
Yeah, not bad, especially when you look, I mean, to put this on the chart, you know, this is where the cursor is. That's 2.5 pennies where we were. I mean, we were just down there at 9 o'clock.
8:45,
let alone being down below 350. And just to jump around, I think the dailies, so your daily lines up at 350. And that's because we were just down at 350 when they were getting set and opening for trading. And similarly, the larger dailies line up at 350 too.
Welcome back, folks. Natural gas.
There's the headline number. EIA, U.S. natural gas stockpiles rising 65 billion cubic feet. We saw the headline before we came over there. At least Bloomberg's survey was talking about a rise of about, as we're jumping around, there's your natural gas market.
Oh, baby, look at that.
More than I thought. I couldn't even finish my sentence. Bloomberg was looking about 58, and it came in at 65 in terms of a build. So more natural gas than they thought. You saw the price just drop from, you know, we were at 355. In the lead up to that 10:30 exact, we dropped even a penny. So we opened at 354. We spiked down to almost 351. Natural gas sitting right now at 352. And to recap again, both of those trades, right? You needed about 2 pennies of movement for the 11 a.m. You needed 2.6, call it even 3 pennies with everything commissions and a couple dollars profit at 3 pennies. So you always want quick fingers on these, of course. If you're making that trade, you could have closed it out at 351. You're almost doubling your money if you're doing the 11 o'clock. You're still, and the point being, though, is that maybe you think it's going to trade higher, and we're already almost back up to 355, right? And you'd have your bullish trade with exposure over 355.
The cool thing here, folks, is that you're going to get the volatility now, too. We have it, and most of the time what ends up happening is that, particularly because when we showed you that it had already gapped higher on Monday.
Yes.
So what that does, that puts enough juice in the market that, you know, I suspect this 4 or 5 pennies is game here now, you know, all day long, which is pretty cool.
Yeah. Let's check back to natural gas real quick.
Yeah.
Okay,
there she is.
We're back down to that 351. So just to illustrate,
that's a big score, man.
It is.
That's a big score.
So jumping back into natural gas, even we're looking at the noons, the bearish spread representing all the value right now, of course, and you'd be able to buy that back for 33. So you're putting up 26. So still not, you know, a dramatic profit, but keep it in mind, you'd only be closing that if you think, you know, the bounce is over. I mean, the drawback's over.
And that's the noon.
Yes, and that's the noon, which was 2.6 pennies. I mean, to jump over to Let me jump back to the 11s, and this will give you a good feel of how these are even different a little bit. You get a penny difference, and that's represent that premium, probably an hour of premium, you know, in there. Buying that back, same thing, 30, and we're putting up about 20, 21.
Right.
Yeah.
So.
Yeah.
Good movement.
Volatility in that market.
In the aspect that they had a build, I would say in the winter, that's like, really?
Yeah.
You know?
Yeah.
So.
And we always talk about both sides. I mean, what's nice when it lines up exactly at that pivot point is that you can always go bullish or bearish, and same thing. You're not paying any intrinsic value. You're just paying, you know, on the 11s, that would have been like $10, which is 1 penny with defined risk. So you're risking 1 penny on one side, you get 20 pennies of exposure on the other.
That's pretty wild.
Yeah.
Welcome back, folks. Dow Industrials up 17, NASDAQ down 23, S&P's down 6.5. You know, it looks like market's waiting for that statement, even though, I mean, it doesn't supposed to be a big deal, but we don't know.
Yeah, pretty calm, calm. Definitely in the context of what we've been doing lately in terms of huge moves on a daily basis, one way or the other. Checking back in on natural gas real quick. Whoa, what happened there? I was about to, we peeked on it on the commercial break. I said, it's a bag of like 353. Again, these are 5-minute bars we're looking at. That's your 1050 bar, about to wrap up in about 15 seconds. But we traded, we're back down to that 351 and change area. For natural gas. So that market's still fighting through some volatility.
It is.
And that's one of the reasons why we look at the 11 a.m. expirations, we look at the noons, right? I mean, you just got almost a 2-penny move in 5 minutes, and you're talking about 25 minutes after we got that EIA number.
Right.
So you, depending on your market bias, did you want to pay for that extra hour of volatility? And in this case, you were paying
cheap money.
You were paying 0.6 pennies, right? It was like for that extra hour of volatility, if that's what you wanted, and that's for both sides of the trade. 0.6.
Right.
Yeah.
That's pretty cool, man.
It is. It is.